And of course, we dig into the company news behind a stock on the move. And the stock price of Yahoo, at least in the eyes of most investors, lots of value investors, is just plain wrong. So you look at the performance of this stock, and it hasn't done a whole lot in the last year, up 10%, a lot less, underperforming the market, despite all the attention from value investors. So let's break it apart and look at what a value investor might see if you were to break up Yahoo. Let's start with a look at the value of Alibaba. It's a complicated ownership structure, but essentially one can derive a value about $5.5 billion. Ken Sena is an analyst who's done some work in this and came up with a number similar to what a lot of other investors have come up with. Add to that Yahoo Japan, in which Yahoo, of course, has a stake along with SoftBank. Then, of course, is a big growing pile of cash. The company has been returning cash under Carol Bartz in the last year or so. That's the value of all the stuff that isn't just Yahoo. Now, look at the market cap. The value the market is giving the entirety of Yahoo stock of $17 billion. Well, with all of the stuff that's not the operating business, valued at nearly that $17 billion. Throw in Yahoo's business for $5.9 billion. Tiny numbers, I know, hard to see, but $5.9 billion for the Yahoo business, and you get all that other stuff thrown in. So the entire enterprise of the U.S.-based media search company, internet company we know, $5.9 billion valuation. What that suggests to us is that the company broken apart might have a much more evident value to investors if the company were to do that and sort of separate out the pieces so the market could see it. Carol Bartz refused to do that as the CEO of Yahoo. One wonders if the board and the special part of the board looking at for a new Yahoo might see some value in breaking up the company.